My name is José Pinheiro. I'm a Columbia alumni and executive board member of the Brazil Climate Summit. Our next panel is one of the most important questions in Brazil's journey to climate and net zero. How to unlock the capital required to scale climate solutions. Brazil has the potential to attract significant investments and position itself as a global leader in sustainable growth. But realizing that potential depends on collaboration between global and local partners and public and private capital. This session will explore what's needed to turn ambition to finance at scale, and how Brazil can become a magnet for climate investment that drives transformation across sectors. I'm pleased to welcome our distinguished panelists, Marcelo Marangon, President of Citi Brazil, Régine Clément, CEO of CREO, Aurelien, Global Head of Climate Finance Policy of the IFC, Renati Suzuki, partner of KPMG, Annie Hills, Vice President of Strategy and Special Projects of Galvanize, and leading this conversation, our moderator, Ramos, Managing Director at BCG.
Hello, good afternoon, ladies and gentlemen. Really a pleasure to conduct this panel here with you. I think we're going to be talking about enablers and barriers for providing finance for much of the things we are discussing here, and also all the discussion how to escalate that, how to take. And we got an amazing lineup here of panelists to get this discussion. For the ones that were here in the morning, I was presenting topics related to the hard-to-abate sector. And I think on this panel, we're going to talk about another expression that we use a lot, hard-to-allocate countries. Okay, so this is the idea, how can we be converging the capital, particularly the climate capital here, for these emerging markets, and particularly for Brazil. Also, you see the caliber and the number of the panelists here. It's also a hard to moderate panel. Okay, so this is another challenge here, but I'm sure. And so this is the first part of our discussion, our moderation here. I will start here with Aurelien on our question again. Then very important, and one of the things is the multilateral perspective that we bring here. So from IFC. Perspective here, what are the key barriers that we see today in order to provide greater flow of funds here for this markets? And of course, you can give a brief description of where we are, what we can do. So this is great.
Thank you very much. I mean, it's special for me to be here today because almost 20 years ago to the day, I moved up the street to get to Colombia. So if I was still 20 years ago, I'll be here today. Good afternoon. Thank you for the question. So IFC perspective on bringing climate finance to emerging markets. I think there are different dimensions to the question. I think when we are in the climate world, and we tend to be in a climate bubble and think that all the problems are about climate finance and specific to climate. But the first thing when it comes to climate finance is a lot of the barrier that we need to go over are general to investing in emerging developing economies. And I'm almost stating the obvious here, but we tend to forget about it. So when it comes to dealing with the political risk and the currency risk, etc., that's very much at stake and what needs to be solved first before we focus on the climate finance part. So for me, this issue of dealing with the overall framework and getting that stability to the investor is one thing. Getting the pipeline of investment in emerging markets is another thing, and a lot of work that needs to be done upstream in the creation, in the capacity building, in facilitating the development of projects through permitting, etc., is key. And then a third dimension, generally, the perception of risk and the importance of disclosure of data and to be able to truly appreciate the risk of what it's like investing in emerging markets. So IFC, as part of the World Bank Group, we try to address, and with a colleague of the World Bank at this different level, from the reform that are needed and to creating the pipeline to having this greater and showing that the risk of investing in emerging market, the reality of the risk is actually lower than the perception. And so initiative like the James database. So these are things that are like very important to like in general, but when it comes to climate specifically now, I think there are also very important barrier that that needs to be addressed, and Brazil is leading the way in many respects. One is that there are, I think, over 400 like taxonomies or equivalent when it comes to climate finance. This is really confusing. I'm starting to get deep into climate finance a few years ago. I'm still catching up. So the need to have more interoperability and comparability under the different framework to accelerate and give more trust in the market and to investors is key. And I think that what Brazil is supporting, like with this roadmap for interoperability as part of the road to from Baku to Belém is key. So that's a first one. The second one is, and I think again Brazil is leading the way. I feel like when it comes to climate and climate taxonomy, there's been a lot of unintentional exclusions from MSMEs to women-led enterprise to like small stakeholders, and I think being able to be inclusive and having initiative reconciling this like the people and the smaller stakeholders to the climate agenda is key. And here again, I think like initiative like the index of Rebaban that connects sustainable finance to inclusion, to literacy, etc., are key. And finally, when it comes to climate investment, is carbon pricing and the incentives. I think there are too many disincentives still in many respects in the emerging market, whether through the fuel subsidies to others or the lack of positive incentive. And I think when I think of Brazil, how Brazil is moving on the carbon market side with its ETS or like certain projects we've been financing that start having some component of carbon revenues through the voluntary carbon market, these are very positive trend. So overall, yes, a lot of barrier, but we see progress, and definitely I think a lot of ways where Brazil is showing the way in a replicable way of like not only to the region, but to also many other emerging countries.
No, thanks a lot, Aurelien. Nice to hear encouraging words here from you. Let me suggest here moving to make a question to Marcelo, okay? Because I think from Citi presence in Brazil very much on the corporate market, being on the ground. So Marcelo, what's on your view here? No? What's the outlook for climate finance in Brazil? Where we're standing today, and where you see the most traction happening, and the challenge that you see on that. Okay.
Thank you, Artur. Hello to everyone. Pleasure to be here in this panel. I think despite all the challenges and barriers that Aurelien mentioned, I think we have a very positive outlook for Brazil. We have a robust pipeline of transactions across different sectors. Sustainable agriculture, green steel, sustainable aviation fuels. So a lot being discussed. Pipeline is very active and very live. So we are very positive on the prospects of executing those transactions. I think one other point that you mentioned is asset classes, and also which of them we are using more. And I think capital markets remain, I think, the main channel to execute these transactions, both locally and internationally. So when we look at sustainable finance, in 24, we raised around $5 billion. This year to date, a little bit over $2 billion, also in different sectors. So a lot happening in water and sanitation, sugar and ethanol, renewable energy. So we see this market developing, but also we see a lot of efforts in innovation. So beyond, I think, capital markets and the traditional project financing, we have been developing together with other financial institutions many interesting solutions like ESG derivatives that were not in place, leveraging long-term offtake contracts to monetize investments in new renewable plants. So this has been quite successful. We were able to raise a substantial amount of funding for one project only with commercial banks, with no participation of development banks. So we could save that capital to other transactions. So that was quite interesting as well. And we also developed the first mini-perm for projects in Brazil, which was well accepted by banks and investors. And I think the goal remains to adapt all these type of solutions to day-to-day products. The more business as usual, as we call in trade finance, supplier chain finance, where we can bring a component of sustainability of climate finance in order to offer a benefit to the issuer and a protection to the investor.
Great. No, very good. Thanks, Marcelo. I'll move here for Annie. Okay, Annie on Galvanize, and I think also if you can tell a little bit, describe a little bit of. We're moving to let's say the new places that are assessing, and I think Galvanize very much based on the U.S. and Europe perspective. So, on moving that and analyzing the emerging markets, what are the key elements and the key characteristics of the journey that you're facing here?
Great, thank you, Artur. I think the issue with being on a panel with such distinguished other speakers is there's not much else to say after you've laid out some of the risks. So I'll talk about them, but it might sound familiar to what you've already heard. Maybe a bit about Galvanize first. So I work at Galvanize. We're an energy and decarbonization-focused asset manager. So we're really just looking at ways to invest in energy, decarb, things that you might think of as sort of climate sustainability investments. As you mentioned today, we have 4 strategies, 4 ways that we do this investment. Right now, it's really just focused in North America and in Europe. I think the reasons why are a little bit early on what you were talking about, which is, when we think about Brazil or other emerging markets, there is currency risk, there's issues around the cost of capital. We also just know that investors have lost money investing in emerging markets if they don't know what they're doing. You have to really understand these markets, have folks on the ground, be able to deal with that complexity, real and perceived. So there are risks and there are reasons that investing in emerging markets and investing in Brazil wasn't one of the things that we started with. That being said, and I'm sure we'll talk about all the ways that these risks are being dealt with, things like eco-invest to deal with the cost of capital that I think are really exciting. That being said, even outside of that, there's such enormous opportunity in Brazil and so many reasons to be excited that we as investors can see, even if it's not something that we're actively taking part in right now. We've talked about some of the areas where Brazil is so exciting. Brazil's natural resources, abundant natural resources, biomass, iron ore, the ability to scale things up. There's a real opportunity for Brazil to be the exporter of clean molecules and materials globally. One of the ways that I think emerging markets can be so exciting is as an attractive, is as an opportunity for real scale, to take technologies that are maybe sort of proven and let them leapfrog and really grow out in an area like Brazil. We've seen that happen with, after the DG laws passed with solar, we see that happen now today with second generation biofuels. That's a super exciting story. It's the same model that we've seen happen in other emerging markets as well, like mobile in sub-Saharan Africa. I think that there is a reason to expect that then when you sort of see this scaling of exciting technologies, you have Brazil becoming a regional leader and eventually also a global leader in these types of goods. So a lot of opportunity, lots to be excited about. Also risks that need to be mitigated, and I think that that we're thinking about ways to mitigate currency risk to bring in that concessional capital, and we'll continue to talk about that.
Great. No, thanks a lot, Annie. I'll move here for Régine. Okay, Régine, and we had just a previous discussion, and Régine was mentioned that she's in the middle of the journey of making the assessing new opportunities, new markets. So if you could tell a little bit, and you mentioned to me here, and I'd also like to hear and to get answers from the audience here, so from the panelists. But I think if you could describe this a little bit on the journey, what are the important elements on assessing or analyzing the potential moves to other markets than you have today in CREO.
Sure, thank you. And indeed, I'm very grateful that I was invited to come here, and I'm here to learn as well. So looking forward to that. I'll just share a little bit about CREO because we're an unusual organization. So our mission is very simply to mobilize capital by our members into climate solutions and decarbonization transition. And we started in 2011. We're founded by American family offices here in New York, 20 of them who were quite active clean tech investors. You know, financial crisis happens. They have conviction that capital markets are going to eventually recognize climate as a material risk and opportunity. And so they decide to start working together to basically buy up a lot of these clean tech companies and continue to build them quietly, partner with the US government, build the solar industry in the US under ARA funding in the kind of 2015. And this community grew. And so we set up a nonprofit organization to essentially work with family offices, family-controlled businesses, and family foundations with this goal in mind. And ultimately, we were curious to find out whether the activity and de-risking activity, in some cases, of family offices can catalyze institutional capital into the climate marketplace. So today we work with about 210 families globally, but half of our families are American still today. But we're growing in Latin America. We have over 20 Latin American families now working with us. So, and really what we do is changing behavior of investors is not easy. And so the way we do it is through norm setting. So behavioral change, you can norm set, you can shame people into doing different things, or you can force them through rules and regulations. So CREO is really about knowledge building, bringing in the deal flow, and connecting the investors so that the buy and the sell side, we're essentially trying to help the market be more efficient. So that's how CREO works. Our families, so they've invested in over 2,000 companies, and we're LPs in over 500 funds globally. Like any investor, families invest globally, but when it comes to things like climate, it often is local. They care about their local communities, local projects. Though many of our families now bring climate at a holistic perspective, so whole portfolio approaches, still it's very local. And so one, it's very important for us to build relationships in Brazil, which we're working on, to really have partners on the ground, because this is a way to understand what the opportunities are and be able to do the work. Currently, about 25% of our families invest in emerging markets, and this is what you were referring to. We're trying to learn how our families can be most catalytic. When I say catalytic, it doesn't necessarily mean concessionary. So I do want to kind of explain that our families can be grant funders. They can take concessionary. They can cap the returns if they so choose to do so. But most of our families want to deploy commercial capital into opportunities, and they still see it as catalytic, but it's horizontal catalytic capital. So you've got, blended finance where the family can come in and de-risk, just like government can. In the horizontal, you're really coming in because you have either a family business that is in mining, and you can be the off-taker of an opportunity and invest, right? So think about families as owning many, many assets. And so they are very uniquely positioned to be able to do this type of investing, whether it's in Brazil or elsewhere. So in terms of Brazil, very early on in CREO, we recognize Brazil is the largest carbon sink in the world. We absolutely have to pay attention to Brazil. And as a Canadian, I look at the natural resources of Canada. Brazil has even more, and what more, you have a big market. And big markets are very important for institutional asset owners. And so really, I think Brazil has everything it needs to be really a key player in emerging markets. Our families are very interested. Really, the key is developing the relationships on the ground to be able to do this work.
So I think that there'll be many people here just taking notes and trying to provide very encouraging points here. I think they're very good to hear the opportunities. But again, I think that there are many things, so very different types of allocation, deployment of capital. But I think it's not really worth if you don't have the right information, the right disclosure. So Renati, I'd like you to share a little bit the perspective. How is regulation evolving, particularly in Brazil, okay, but also building a parallel to the worldwide trends, okay?
Hi, Arthur. Thanks for having me here. As a Columbia alumni, it's always nice to be back here, so I'm back at home. First, Brazil should be very proud because we were the first one to adopt and regulate IFRS sustainability disclosures worldwide. So by 26, all listed companies in Brazil will and should disclose sustainability information. Not only that, but financial institutions from 26 to 28, depending on the size, will have to disclose sustainability information based on the IFRS sustainability standards. Very nice. So yes, it is a mark. So sustainability, the IFRS sustainability standards require entities to disclose risks and opportunities related to sustainability that will impact the prospects of a company in a medium, short, and long term. It is a forward-looking, so it is a report for investors, informing what are the risks and opportunities in a medium, short, and long term. Not only that, but the regulation comes with the reasonable assurance. So all the information that is going to be disclosed has to be an external auditor assuring that information, bringing more transparency to that information. Not only that, but also it is worth mentioning the CFC 1710, which is a resolution that puts the responsibility of the sustainability information over for the accountants. Now in Brazil, all the accountants are responsible for the financial information statements. And from now on, the sustainability information also, it is responsibility of the accountants, which means accountants will bring to the table of sustainability all their experience on the reporting process. But this is a big picture of the regulation in Brazil, but we have to mention the ecosystem behind it, supporting this adoption. So I'd like to mention first, we have a CBPS. CBPS stands for Comitê Brasileiro de Pronunciamentos de Sustentabilidade. They were created to develop and enhance IFRS sustainability and make it a reality in Brazil. And they are doing a great job with the working groups, sharing knowledge, building capacity. Also, in this ecosystem, we have IBRACON. IBRACON is our auditor association, and they are doing a great job building capacity, training, not only for preparers, but for regulators and for auditors too. So all this is possible for to the implementation in Brazil of these standards. But you mentioned what are our maturity level in Brazil. We are a newborn baby. We were the first one to adopt. We are learning with everybody, but we were the first one to adopt, to regulate. So what I can say, we have we have a lot to learn. It is going to have a room for improvements, but we are on the right track. We have the regulation, we have the ecosystem behind supporting us.
Great. It's good to be a pioneer. No? So it has a cost, but it's good to be a pioneer. First of all, thanks a lot for all the panelists here being very objective, okay, and great. So, but coming back to Aurelien, okay, Aurelien, and I think with all the characteristics of IFC and more agility and things like that, we'd like to talk a little bit about the innovative instruments, okay, that you see that are important. So what would be the most important areas to watch related to climate finance?
No, sure, like very important, but my take, and when I hear innovation, I always like have mixed feelings, because on the one hand, yes, we need to innovate, come up with like new ways of doing things, but we need to keep in mind that what we need is scale. When you look at the Sangway and like Nixon report and what are the needs in terms of trillions of dollars, like we need to be able to scale. So if we just innovate for the sake of doing one deal, two deals, etc., it's not what we need to do. So like when we, like in the context here in Brazil, actually we use at IFC Brazil a lot of a bit our laboratory to try new things, and then that we try to scale in the region and elsewhere. So the first thing that comes to my mind, it's actually innovation in terms of building capacity to ramp up existing instruments. For me, it's something important. There's a bit of fatigue when it comes to labeling like all the different color of bonds, but they still has values, and we have a great program to train the banks and to build capacity and for them to develop their sustainability strategy. That has led, like like through this standardized program, we work with 25 banks in Brazil that issued cumulatively over $1 billion in sustainable bonds, like green bond, etc. So for me, that innovation in the way you build the domestic capacity to then lead to really tangible financing. The other type of innovation is push the boundary when it comes to labeled instruments. Like one where we see a lot of potential in Brazil, and we were very happy to support the first issuances with biodiversity bonds. So we just supported Itaú in Brazil, issuing, I think it was a 1 billion real, 1.4 billion real bond, first bond in the market that complied with IFC's guideline that are no part of the ICMA principle and started to be replicated in the region. So these are examples of like innovation through like with big replication opportunity. Another one where I see a lot of potential and already drive a lot of the numbers at IFC, and through this structure in itself, it gives the opportunity to innovate a lot, our sustainability-linked financing. I think if it's an instrument that gives you the opportunity to truly innovate through the KPI to push decarbonization, to push adaptation, to push biodiversity, and try to also address what I mentioned before, reconcile some of the social goals with the climate goals by embedding different KPIs. So I think that the instrument in itself, like the sustainability-linked loans or bonds, are not innovative, but how you use them and the KPIs you use while remaining credible, so you have to be careful not to get to the greenwashing, it's very important. And again, it's in Brazil that we did with a company called Horizon in the waste sector, like an innovative SLF that resulted in one of the largest recycling facility in Latin America. And then the third bucket, I think, of innovation that we try to push at IFC is addressing this need of pooling the different needs to aggregate investors to enter different emerging markets. Some of the deals are too small for institutional investors, or to bring, or like due diligence will be too complicated for some form of the family office, etc. So we want to create platform, originate to distribute and do this pooling that then we can also combine if needed with some blended finance, etc. So the innovation has to come from this kind of structure to really bring the scale and make sure we tap into all the different sources of investment. Again, I could go on and go on. Innovation has to be in technology, etc. But focusing on the market and financing, that for me, that's three key priorities.
Great, Aurelien. Thanks a lot. Okay, you started and I said, "Oh, innovation is not about." So very good understatement in the beginning. So this is great. And then Marcelo, coming back to you, okay, and talking about the overall framework of climate finance, particularly in Brazil, corporate clients. Would like you also bring in your perspective on the different narrative and lessons learned, and also on the forward-looking, how do you see those perspectives, okay?
Thank you, Artur. I think I'm glad to hear most of the points my colleagues mentioned, is aligned to what we see in terms of forward-looking of climate finance. I think one challenge is how we align the sustainability goals to the established financial principles as well as risk management framework. And then we need to do that through different ways. So we mentioned here currency risk, risk management, mitigation. So I think the first point that we cannot lose perspective is that these are all financial projects that need to be structured and executed. So we need to ensure that the project is viable and bankable, right, in all verticals, from the attractive return, so ensuring that the capital allocated has the right return, not only to banks, but to investors. Second is risk profile, right? So it needs to be acceptable. So we need to be able to identify, manage, and mitigate risks. And then we can go through maturities of the financing, debt and equity, ensuring that we have the adequate capital structure for the project. So I think that would be one vertical. Another one is diversification of funding options. So not only bringing new stakeholders, but also through innovative structures, having in mind the scalability of the solutions. So I think one of the merits of the bonds was the standardization of green and sustainable linkage, that everyone was focusing on the very type of bonds. We were able to scale very, very rapidly. So, and we continue to innovate, as you just mentioned. One other important point is taxonomy. So not only the governance on it, but the standardization. So when we look at the several different taxonomies in different markets and jurisdictions, that doesn't help, right? So we need to standardize, and the more we can have a global view on the projects, I think the higher the appetite and the capacity of the financial sector to execute. We also, talking about scale, I think during certain period of time, we were all very focused in innovating and getting the deal done, but not necessarily in scaling up. So I think we are changing the approach now, instead of small to large, from large to small. So if we can get very large transactions that attract a lot of attention, visibility, I think we can get the stakeholders more involved in a more proactive and constructive way. And I think the last point is Brazil is the right place to do it, right? So it's very glad to see everyone interested here, and we keep hearing new opportunities and new stakeholders that can help us execute this challenge.
Great, thanks, Marcelo. Thanks very, very much on this perspective. Next question to Annie, and so Annie. First, I heard here that she was a colleague of BCG, so some years ago, so very nice. But also taking the more recent experience, and I think you serve in the U.S. government, and Senator John Kerry as climate envoy, but also on the experience on the First Movers Coalition. Okay, and so what's the role also of public and private partnership.
Thank you, Artur. I will answer this, I promise. I wanted to first I really like two things that I heard that I wanted to call out quickly, keeping my Galvanize hat on for a second. Régine, I think it was so important when you reminded us that capital can be catalytic without being concessional. And that really also plays into, Marcelo, what you were mentioning about the need to create a capital stack where there are attractive returns in these climate and sustainability investments. And I think when we just think about how can we crowd capital in to EMs, to Brazil for sustainable projects, we have to be creating a capital stack in a way that drives attractive returns. I like to talk about that also because Galvanize was created with the goal of proving that you can drive attractive returns by focusing on the energy transition and decarbonization. Those things do not in any way have to be in opposition. They really can go hand in hand. I'll switch now on to my other hat. As you mentioned before, I was at Galvanize. I served in the previous administration, and actually alongside BCG as a knowledge partner, we worked to stand up something called the First Movers Coalition, which was a public-private partnership focused on creating demand signals for the hard-to-abate industries, long-distance transport, heavy industry, so that we could crowd in the need to capital to get first-of-a-kind projects off the ground. This was a public-private partnership between the US government, but also other government partners, and a handful of over 100 corporations. And one of our government partners was Brazil. At the end of the day, if you want to get a first-of-a-kind project off of the ground, that is going to require more than just the private sector. That requires additional input from the government. It requires clear regulatory signals. It requires understanding of what's going to happen in terms of infrastructure, where will hydrogen be, where will these key inputs be, and the government really needs to be working hand on hand on getting those projects off the ground. Actually, Artur and I were both in Brazil a few years back for the First Movers Coalition to have discussions on, for example, how can you get those sustainable aviation fuel projects off of the ground. You know, as we mentioned, Brazil has this incredible sort of feedstock and biofuels and clean energy, so they're a clear fit for sustainable aviation fuel projects, but there's a high green premium for that. Things like Brazil creating a SAF mandate, plus then having private sector come forward and say that they will pay a higher green premium for SAF, those are the types of things that you need to come together to make the puzzle piece of projects work. You see it as well with hydrogen as an input into clean steel. You need to understand Brazil had to create a hydrogen plan. That's now an EU global gateway project. That input from different governments, along with the private sector, is how you really make these exciting innovations move forward. So yeah, it's really just, we can't do this without the private and the public sector working together to put together these puzzle pieces of demand, regulation, and finance, and ultimately create an attractive project.
Okay, so it's in the role also of working the projects now, also that and the contribution. Very, very interesting point. Coming back to Régine here, and I think dealing with, let's say the high net worth individuals here, families that you mentioned, and talking about climate finance. Now, what do you think are the important thing, particularly on this, also on this new journey that you have been started explaining to us? Okay.
Great, thanks. So I guess it depends what kind of an investor you are. So our families, some of them invest only in funds, some really prefer to do direct, some will have 80% portfolios that it's direct and quite venture focused because they can. Others love platforms, so it really is quite a mix, and it depends what kind of an investor you are on what kind of demands you would have around investing in Brazil. Like Aurelien, we're also trying to figure out a platform that allows the buy and sell side. So if you're interested in funds, I think it's being able to find funds where you can diligence teams that have experience in climate. They're still we're tracking 2,400 funds, but they have at least 50% climate, and of those, about 400 are in emerging markets. So at least our data set is still quite small on the emerging market set. So that doesn't encourage necessarily families, right, to say, okay, there's a big market, there's a lot of opportunities, I have optionality, I can compare. So that's one thing that we're really trying to increase our pipeline of fund managers who are involved in investing in Brazil. Some families, just like institutionals, will do emerging funds. Some will not. I know Galvanize will know something about that as a first-time fund, and you have many funds. But it's hard to convince investors to come into a first-time fund. So are you a native fund, or are you a generalist fund that has a climate strategy that is now looking at emerging markets? So for example, we saw TPG, BlackRock, and Brookfield. I think the three of them went into emerging markets in partnership with Altera being the UAE $30 billion climate fund that really is trying to catalyze a lot of institutional capital into the space. I'm very happy to see the Brazilian government talking to TPG and Brookfield around this $4 billion opportunity in Brazil. Those are the things I think that need to be happening. Some investors will only feel comfortable in going into the strategies of GPs that they're already invested in. So we need to think about how do you continue to build emerging managers and get them what they need to be successful. This is often also technical assistance on the ground and connections on the ground and partners for offtake and getting connection to the grid, et cetera. So all of that ecosystem needs to exist on the ground for these emerging managers and the established managers to be able to be successful. So that's what families would look for, and that's what obviously institutional investors would look for. On the direct side, much harder for an American family who might not know Brazil to suddenly decide to do a direct deal into Brazil unless you're developing relationships with families in Brazil and in the region who are interested and have assets, again, to do this work. The other thing that I think is interesting to note is Brazil is the largest bond market in the EM or Latin America, actually, I'm not sure. And there's, we often think about equity in terms of deployment and asset class in the climate space. And there's a tremendous debt and bond opportunity in emerging markets, including in Brazil. So we are in discussion with IFC and some Latin American families, and this is new for CREO, because we see these opportunities and we see that they're not necessarily always moving as fast as we'd like them to. We're getting involved in connecting the dots with the underwriter, bringing some families to bring certain assets that would allow this to be de-risked, and then have some of the families be anchor investors into projects. But this is project by project. It's not something that's easy to scale. So you need to do the scale on the fund, and the direct really is knowledge, educational building, and relationship building.
Great. No, thanks a lot. A very, very clear pathway here. Thanks for sharing that, Régine. And Renati, I think you mentioned very well there is an infrastructure, there are very competent advisors to support. But how are companies prepared for that? What are the challenges? What is let's say, taking the other side of the equation here?
Well, for the implementation, we see a lot of challenges during the implementation of the IFRS, but depends on the sector. So depends on where are your business, how is your business model, your value chain, and the maturity level of sustainability within your business. However, what I see in my clients, there are 3 areas that is more challenge. One is understanding the value chain. These standards require you to disclose risks and opportunities not only within your operation, but understanding your whole value chain, upstream, downstream, and the whole life cycle of your products and services. First challenge. Second challenge is connectivity. is a new concept that IFRS brought. You have to connect your financial information into your sustainability information. So if you are claiming that you are going to be net zero by 2050, how much does it cost? Where is going to be funding? From where? Is going to affect your fixed assets, the useful life of your assets. How is going to change over time? You need to make the connection from now on. And third is building internal controls over sustainability information. When I said now, from now on, sustainability information has to have assurance, reasonable assurance, it means that you have to build strong internal controls to have high quality data information for your report. For what? So investors can make an informed decision over your information, right? So it is by 26 for all listed companies, as I said. It is a challenge, as I'm mentioning here. So my message here is to start now. You have to understand where you are now and how far you are to compliance. But don't make it only a compliance exercise. Otherwise, you are going to have only the costs, not the benefits of the implementation.
Great. Thank you very much. I'd like to make a final round of questions, a similar question for all the panelists here, and I go by the order here that we have started with Marcelo, but we have COP30 in Brazil. There's huge expectation on the finance side, okay, so that we can have breakthroughs, many of the things, and so I think unlocking climate finance, unlocking climate opportunities. So I'd like to, if you have a wish list of things that would be outcomes, important outcomes for COP30, what would be your top, what would be on the top of your list? Because start with one, and then I'll go the order here. Okay.
Oh, thank you, Artur. Thank you again for the opportunity to speak in the panel. I think looking at two key words, I think is collaboration and commitment, right? Collaboration, we heard here in the panel, that if we work together, we can make things happen, right? So leveraging capital markets, allocating our balance sheet through viable projects, profitable capital allocation, good risk mitigation. So I think it's collaboration. And more importantly, which is 100% related to COP, is commitment. So we really expect a very large commitment so we can address all the climate change challenges.
Thanks. Régine?
Two of the major friction points that we see to enable to scale solutions globally are two things. The missing middle. So we do a lot of research looking at the fact that not a lot of capital is going into that missing middle, and that affects every region, and carbon markets. And there's a relationship there. So we need high integrity and with good MRV carbon markets and projects. A lot of technology companies, as they scale, they leverage carbon markets as well. And we've seen, again, we have a portfolio of over 2,000 technology companies within our membership. Many are, essentially going under Chapter 11 in this current environment, which is really unfortunate. We're trying to save many of them. But part of it is because of the fact that the voluntary carbon markets are actually not working and not credible. And so those are the two things we need to fix, the missing middle, the carbon markets, obviously figuring out how nature can leverage the carbon market so that we can do more.
Very interesting. Aurelien?
For me, I will not start with finance. I think if in my bucket list, one is I want to see ambitious, updated NDCs. I think that's the starting point, that's the follow-up to Paris Agreement, and all investment needs, etc., will come from or would be facilitated and made more credible by ambitious NDCs. So that's number one. Number two, yes, I think with you going back to finance, I have to put back this hat, some serious commitment in terms of financing and clear progress on the route from Baku to Belém. I think that will be important. And three will be a kind of formal recognition that the private sector and private commercial financing is part of the solution. I think there's still a bit of denial. It's a donor money, public sector thing. We're not going to get to the trillion like this. So it's time to recognize this and recognize it formally.
Renati?
What I wish is simple, more transparency. You find the projects that is feasible, is financeable, but communicate in a way that resonates to your investor. So more transparency and more communication.
Amen.
All right, I jotted down 3 things, and I think all 3 have been said, so I will still say all of them. I think the first thing is hoping to see, real innovative solutions for the question of currency risk, so that we can have more money flowing to the EMs, probably in some multilateralized MDB-backed mechanism. I think the second is seeing real investable plans coming out of the NDCs that countries are delivering. And then the third is high integrity Article 6 carbon market projects, so we can see that market begin to really blossom.
Well, thanks a lot. I think that we were able here to have a very good perspective of the ecosystem of climate finance and different types of different angles of capital allocation in this area. So it was very enlightening and bringing. And we saw that this is not involving only the financing per se, but also we have discussion on the importance of structuring projects, the NDCs, public and private partnerships. So I think it was. I'd like to thank the panelists here for this very enlightening discussion and very encouraged on that. We didn't, Marcelo said everything is aligned here. We didn't align the content of that, just align the process, but I think it's very good. And so thank you very much. Thank you very much for being here.